Today's lesson, I will introduce to you the candlestick patterns and technical confluence. If you use a single candlestick pattern and do not confluence with other conditions to set up any scalping signal or swing signal, it will be very dangerous and risky for your signal. And that's why today's lesson, I will show you how to use the candlestick patterns, confluence with other technical analysis. All right. Before I start my live stream today, I would like to ask if you hear me well. Yeah, let's comment. Okay. Yeah, I would like to check the signal. Yeah, the signal first. Is it okay to hear me well? Hello. Hi, Kevin. Could you help me that? Yeah, respond for the signal. Is that working well or not? Okay, thank you so much, Kevin. And the first model in today's lessons, I'm gonna show you the Holy Trinity of confluence. Why 90% of traders fail with candlesticks? Because they trade them in a vacuum. And to execute a high probability trade, we require alignment of three distinct market forces. And this is called the Trinity of confluence. And the first question we need to ask when we set up any signal by using candlestick patterns and confluence with other technical analysis is the location, which is where. Yeah, where is that candle? It's lying on which location on the chart. A reversal signal is only valid, if it occurs at a Q zone. So what is a Q zone? That is horizontal structural levels. And we will pay attention to the previous support or resistance or daily highs and lows. Okay, we will pay attention to structural levels like support or resistance, previous highs or lows. Okay. And one tips for you, if you want to identify reliable support or resistance zone, we should take a look them. Yeah, we should seek for them in a bigger time frame. And for me, I usually seek them in a daily time frame first. All right, in a daily time frame first. If you observe the chart, like gold USD, today gold markets have some problems with one chart. However, you can see the bullish momentum is still under the bearish, the selling pressure at the moment. And we can identify there's a trend line here, right? Trend line. However, this still have some resistance level, and we can identify as the highest price of today market. Yeah, today trading session. And this is the one. Yeah, the price level higher than the current price. We will call it resistance level. Okay, and I usually use the red line. I usually use the red line to indicate for the resistance zone or resistance line. Okay, and we can looking at the previous highs or lows as well. If the previous highs will indicate as resistance zone. Okay, resistance. And for the previous low, we will identify them as support level and use the green or purple to indicate them as support zone. Okay, choose the area near the current price. Okay, choose the area near the current price. Okay, so this is the example to do in the daily time frame. And next you switch into the smaller time frame gradually, like 4 hours. Yeah, 4 hours. And you can see that the resistance or support zone is wider. Yeah, it's going to be for a little bit. And you can move the resistance zone to exactly where the highest price, yeah, in a session, in a day trading session or the previous day. Yeah, yesterday or previous day trading session. All right. So this is the example for you in a 4-hour time frame. You can widen the distance between the resistance and support area at this zone around 41.53, right? You can see that at this zone, gold price have forming a very long wick, very long lower wick for 4-hour candle, right? 4-hour candles. And this is also indicate that for strong support zone, okay, in 4-hour time frame is also a reliable one to help you identify a good support and resistance zone. Okay, and then you switch into the smaller time frame like 1 hour. Yeah, 1 hour to looking for smaller support and resistance zone. Okay, and here you can see that in this candlestick pattern is forming a bearish candle, right? A bearish candlestick. And this is also another resistance zone for you. Okay. And change it into red. That is how we identify support and resistance or trend line. Okay, or trend line. The trend line that's forming in the daily or 4-hour time frame is much reliable than, it's less noise. Yeah, exactly. That's meaning less noise than the trend line or support or resistance zone in a smaller time frame like 5 minutes, 1 minute, or even 30 minutes. Okay. So as you can see that the trend line I just draw for you on the daily time frame, the price heading up, breakout from that trend line. All right. However, today trading session, gold price having a lot of noise because that we have some problem with CME companies. Okay, so it caused a delay and it's lag on the 1-day trading chart. Yeah, that's an unexpected event that happened on the last trading session of this month, of this November. All right. This is irregular event. So nobody expect for this. Okay, so that's why today is contain a lot of risky and having big volatility. Okay. However, it still follow. Yeah, it still follow the rule. The rule of the market is breakout and then reverse to retest near the trend line area. You can see that the current candlestick in 1-hour time frame is starting forming nearly a hammer, right? A hammer candlestick. But we need to wait around 20 minutes later. Yeah, to wait this finish to establish this candlestick, right? And yeah, that's just how we can identify the resistance and support zone gradually from the bigger time frame heading to the smaller time frame. And after identify the resistance and support zone at those area, we were looking for the familiar, very familiar candlestick pattern. Yeah, candlestick pattern. Like this one. Yeah, this is the resistance zone, and you can see it is the bearish Harami candlestick pattern, right? The bearish candlestick lying within the bullish one, the bullish candlestick before that, and it's lying at the resistance level. So it's indicate for a bearish reversal in the near future. And that is how explain. That is explain for the current downtrend at the moment. All right. So let me looking for another example for you. Yeah, and this is in the 1 hour time frame. And doing the analysis for gold market or other currency pairs. If you want to plan for daily trading plan, looking at the gold chart, yeah, looking at the chart in 1 hour time frame is recommended. All right, so that is the first point we need to pay attention to if you want to identify the support or resistance level. That is the general name we call horizontal structural level. Structural level. And next thing we need to pay attention to is dynamic level. Dynamic level. Besides support or resistance or trend line that you can see obviously on the live trading chart, we also have the dynamic levels. That is EMA. Yeah, EMA. And the familiar EMA I usually share with you is 34, 89, and 200. Okay, this is the very effective indicators that I usually to do it. Yeah, to set up the scalping signal or identify the technical analysis. Yeah, using this indicator. Okay, multiple EMA, 34, 89, and 200. Or any traders, they will use the SMA, simple moving average. But for EMA, yeah, it's gonna be more sensitive to the market price movement. And that's why I do EMA instead of SMA. The next one is, yeah, trend line. Like I just shared with you in the beginning of today topic, right? Today lessons. Yeah, I can identify a daily time frame and drawing the trend line. Yeah, starting from the peak, the highest peak of gold price that's forming in October 25. And we can connect to the next moving peak, the lower highs. That's gradually forming a trend line. And more reliable trend line requires more pivots. Yeah, pivots which mean the connection point between the candlestick and the trend line. Okay, any trend lines have more pivot points. It will become a more reliable one. Okay, and for the current daily time frame, if we can draw a trend line like this, I believe that gold will move in the correct direction that we identify in the beginning of every day. Every day we start trading. Okay, and the next factors, yeah, no level, which means no trade. Ignore all candlesticks forming in middle of a range. That just means when the market's moving in the narrow range, or we usually call it sideways. Okay. If you cannot identify the market's price movement range, don't trade. Okay, don't trade because you don't know where's the stop loss, hunting from the big players or sharks, right? So if you cannot do that in the beginning of trading time, so just practice more and don't trade. Don't dare to risk your capital, yeah, to the things that is not effective. Yeah, it will not bring you profit. Don't level. I mean, don't trade. No level. Yeah. Okay, so we need to pay attention to this remark to avoid Any mistake? And the next one, besides the location, that is where we need to identify the candlestick patterns. We need to pay attention to the second factor, that is momentum. Momentum. Okay, we turn into red. Momentum, that is the strength of the candlestick pattern that's forming. The momentum. We can use RSI. This very familiar indicators to calculate or measure the momentum of the market, of the price, is RSI. Relative strength index. It's not to trigger entries, but to gauge the health of the move. For the RSI divergence, this is the strongest signal. Price makes a lower low, but RSI make a higher low. This indicates sellers are exhausted, setting a stage of a bullish candle. All right, and if the RSI reset in a strong uptrend, let's wait for the RSI drop to 40 to 50, not necessarily 30. While the price hits support, and that is a trend retest. All right, this is the, I will show you now. Choose indicators. Click to indicators and type relative strength index here. And the next one. Next one. If we, let's see how the market's moving. This is in the daily time frame, and let me move it closer to the smaller time frame, because in the daily time frame, it just moving, heading to nearly 60. The current signal, the current RSI index is nearly 260, right? And it's tend to the bullish momentum is increasing gradually, and you can see the line is heading up, right? The line is heading up. Okay, so if you want to identify the detailed movement, switch into the smaller time frame, like 1 hour, to looking at what is going on. First thing we need to identify, that is the real trading chart must be the same, exactly the same, the theory. All right. And what is the theory for divergence? Let me show you the theory of RSI divergence so that you can remember and confluence to this sector. Whenever I move the chart into the smaller time frame, the walls is usually disappear. Let me do it gradually. Ooh, where is the it's moving up here. That's weird. One hour. Okay, there you go. Divergence. The price makes a lower lows, but RSI makes higher lows. If you use this RSI divergence, you need to be patient to wait it come true. Okay, it's established on your trading chart. And the current gold market did not, right? It doesn't form the bullish divergence. However, when I observed the trading chart a few days ago, yeah, I can see the bullish, yeah, the bearish divergence that happened on the chart. Okay, so let's take a look for this one. You can see that it's forming higher highs here, higher highs here. However, in RSI, it's forming lower highs. Okay, so this is the signal for the bearish divergence. Now, why was it happen? Even though that is forming higher highs, however, the volume as the higher high trading is bigger than, yeah, or higher than the previous peak. So that's why it's under a lot of selling pressure. Yeah, the selling order is bigger than the buy order, even though the price is increased. Yeah, the price increased. However, the selling volume is bigger than buy volume. And that's why RSI forming lower highs. And that is the signal for the divergence. And you can see that in 1 hour chart, it's forming, yeah, 3 consecutive bearish candle. Okay, but it just happened for the short term because we have EMA 34 below here. And like I just explained to you, this is acting like a dynamic support. Indeed, dynamic support. And that's why we need to understand the market movement and the meaning. Yeah, the meaning, how to use it, how to use any indicators, especially the common one like EMA or RSI. Okay. And for me, it's not easy. It's not easy at all because the first thing is patience. Yeah, you need to be patient to wait for this signal occur. All right. And this is in 1 hour chart. 1 hour chart. It will form. Yeah, it will form for the entire broader view of the market of the day, of a day trading. Okay. So if you want to set up any big target, big take profit target, the first thing is patience. Okay. And that is the example for you when we use the RSI divergence on the chart. And if you want to set the take profit, take note. Yeah, pay attention to the lower support zone. Lower support zone. And as you see, when it's nearly touched to EMA 34, it's starting, yeah, having the bullish reaction after that. Okay. So at this point, we will see another bullish. Yeah, this is the bearish reversal signal. Another bearish Harami candlestick. Okay, and that is how we can use the RSI confluence with other candlestick pattern to identify the market trend that's going to be happened in the near future. All right, and let's coming back to the theory of today's lesson. The third one, the third factor is the trigger. Yeah, that's just when it's gonna be happened. And this is the specific candlestick pattern like pin bar or engulfing that tell us the exact movement. Yeah, exact movement to pull the trigger. All right, and this is when we need to seek for the confirmation candle, like pin bar or marubozu, and so on. Okay, so that is the first model, the content of the first model that you need to follow 3 steps. Yeah, to set up the holy trinity of confluence. First one is location. The next one, momentum. Yeah, by using the RSI or other indicators. But for me, RSI is more common. And the last one is the trigger. That is when the confirmation candles occur. And the next part, module 2, is high probability setups. We were heading to high probability setups. Okay, allows me to move in a daily time frame. So that is going to be easier for us to have more space. Yeah, more space to show you the content. The first one, for gold market, I'm gonna show you liquidity sweep bin bar. All right, in today Asian session and London session, it occurs a lot of bin bar, right? That is when liquidity sweep, because today trading market is the last day, yeah, to form a month candle, and there was an unexpected event from CME, yeah, CME company, and that is when the big players hunting for stop loss, okay, and there's a lot of liquidity sweep on today trading. And gold often spike to stop out early traders before moving in the real direction. This setup exploits that volatility. And for the pin bar, first thing we need to pay attention to is the wick. Yeah, the wick of the pin bar. It must be at least 2 times or 3 times longer than the body. And for the sweep, the tail must be clearly pierced through a key support or resistance level and instantly rejected. For the body of the pin bar, it must close strictly inside the previous range. A bullish pin bar must have a green body, that indicates for the bullish momentum for the higher accuracy. And how we can execute this strategy? The first thing we need to identify is price approaches a major support zone aggressively. And do not enter while the candle is moving. Let's wait for 1 hour or 4-hour candle to close to confirm the rejection. Okay, and for the entry, that is the 50 retracement trick, because pin bars on gold are long. Entering at close ruin your risk-reward ratio, and you should place a buy limit at a 50% of the pin bar's tail, and stop loss around 50 pips or below a tail's wick. And for the take profit, you can set the target as next major resistance structure. And that is the theory. And now we will looking at the real chart for 1 hour. 1 hour, okay? Yeah, this one, pin bar. This is the pin bar, have long wick, right? 2 times, and 2 times or 3 times longer. And this nearly balanced, equal to the body, right? Let's looking at the one that is more reliable than this. And you can say that even though it's the lower wick nearly near equal to the body of this candlestick. However, the bullish momentum was dominating the market at the moment. Yeah, it's dominating the market at the moment. Yeah, because it's having the reaction. Yeah, the reaction with this trend line in the daily time frame. And also this is the lowest price matching with the previous support zone. Yeah, here. If you use the volume profile to measure the trading volume at that specific price list, range. Price range, volume profile here. Yeah, here we have the longest bar. So that indicates there's a lot of traders, a lot of orders at this zone. Okay, and this is the reliable support zone on the 1 hour time frame. Okay, this zone at 41.56 because support is the zone. So we need to identify is at 1 to 2 price distance. Okay, and the green line, and the blue lines is from 53 to 56. That is the reliable support zone for you to identify on the chart. Okay. And when you see this forming a bullish candle, this bin bar candle, let's zoom it out. Yeah, this is the bin bar that happened, established at the support zone. All right, and the current bullish momentum is still occurring, right? The lower wick is 2 to 3 times bigger than the body. Okay, that is the first specific point. And the next one is lying at the key resistance, the key support zone. Yeah, the key support zone. And that is in 1 hour time frame. Okay, and for the next candle, yeah, we need to wait for this bin bar established on the chart. And the next candlestick will be your entry. Indeed, will be your entry. Open price. And the stop loss you can set at below the wick of the bin bar. Yeah, below the wick of the bin bar. And the take profit will be set at the higher than resistance zone here. This is the first take profit. Yeah, the first take profit. And this is the second take profit. All right. And obviously, you can see it's break and heading up to 41.92. Yeah, so that is the example for you to easy to imagine and use it to set up your swing trading. Okay. And I will summarize it for you. The first thing you need to pay attention to the support zone. Yeah, support zone. And looking at any bin bar that officially established on the chart. Okay, how is it forming? The lower wick 2 times to 3 times bigger than the body. Okay, and wait for this bin bar established on the chart at the support zone. And the opening price of the next candle will be your entry zone, and set the stop loss level lower than the lowest price of the previous bin bar. Okay, and the take profit you will set at 2 levels. The first one is the peak, the previous peak, yeah, previous highest level around 41.61, and the second take profit will be at the previous after the first one, which is 41.67. Okay, And officially that obviously you can see, yeah, it's heading up to 41.94. Okay, so that is the easiest way for you to use the candlestick pattern confluence with support zone. Support zone. And also, there's also a EMA 34, an EMA 34 here, and it's acting like a dynamic support zone. All right, so there's a lot of conditions. As I counted 3 conditions, support for buy signal. Okay, buy signal. So that is the example for the lesson of this part. Liquidity sweep, bin bar. And the next one, engulfing retest. Engulfing retest. How does it look like? How is it gonna be? Let's write down now. The standard engulfing patterns often lead to drawdowns. The retest methods minimize risk. And you can see the signal candle completely engulfs the body of the previous candle. At volume filter, for the volume filter, the engulfing candles should have higher volume than the previous candle, indicating institutional intent. And to apply this method, you should look for this pattern at the end of the pullback in the trending market, like bullish engulfing on an uptrend line. Yeah, uptrend line. And for the trap, most traders enter immediately at the close. That is very dangerous. Market makers often push the price back to test the order block created by the engulfing candles. And for the entry, you should draw a Fibonacci retracement on engulfing candles. Set the limit order at 50% of the level. And for the stop loss, strictly below the low of the engulfing candle structure. Yeah, and take profit, we will measure at the previous high of the market structure. Okay, and now we were looking for the example in the engulfing retest. Engulfing retest. So let's go back to the 1 hour candle. All right, here we have the engulfing candle. All right, let's take a look at this zone. You can say that this is the starting point of bearish downtrend. Yeah, bearish momentum, right? And the bearish candlestick have the length nearly engulf the bullish one. Yeah, the bullish candlestick. And it was confirmed by a powerful bearish candlestick. Yeah, which make gold price decrease from 42.44 to 45, 41.85. Nearly 60 price, $60. Yes, nearly $60, right? And this is the you can see it as the example, but it's not clear. It's not clear enough like this one. Yeah, this one is more clearer. It's clearer for you to understand. The body of the bearish candlestick entirely engulf. Yeah, engulf the body. Yeah, the length of this candlestick. All right, and this is the bearish engulfing candlestick pattern. Starting for another downtrend. And it occur at the resistance zone. You can see the rejection. There's a lot rejection, right, from the sellers. And this is forming a fake breakout. Now we thought that, oh, market gaining a lot of support by the buyers here. However, It's just starting for bullish trap, right? Bullish trap. So that's why we need to wait when the market's moving clearer direction. Yeah, with clearer direction. And that's why our analysis might be wrong. And that's why stop loss is the shield to protect your capital, your trading capital and profit, right? So if you if you revenge market, that, oh dear, this is the signal for the bearish reversal. However, we step on to our decision, and we do not enter any stop loss order. Okay, and we just step on to keep it and adding a lot of orders after that, buy order after that. You can say that even though there's a lot of fair value gap above here and gold price, and the price tend to fill on this fair value gap. However, it's not happen right now. For that theory, gold market doesn't let it happen. The big players doesn't let it happen, and they just let gold price decrease gradually. And if you step on to your buy decision, you're just adding more buy position. That is when your account is in red flag. And you can see that it officially tells you this is the signal for the bearish for the downtrend. Okay, we need to be flexible. Do not step on to the market, especially the sharks, the market makers. They will destroy your entire capital, trading capital gradually if you step on to your decision. Okay, and that is besides the example, I want to remind you about the importance of the stop loss. All right. And obviously, you can say that gold filled the above fair value gap already. That is the story in the future. I usually share this point to you. We don't know when, but it definitely happened. Okay, it happened for sure, but we don't know when. All right. So, in conclusion, just follow the signal of the market. Want to tell you, do not try to revenge the market. Only you will get the regret. Only you regret to your decision. Market makers, they don't. So that is the sweet trap they want you to get in. Okay. So follow the signals that the market want to tell you and follow the trend. Follow the trend naturally, and you can increase the winning rate if you are flexible with the market flows. Okay, and by using my analysis and signals in our VIP signal group, this is another conditions that help you to increase your profit. For the days that, like today, the market is having the unexpected event, okay, which make the wonder trading chart is freeze. This was freeze in the today Asians and London session a few hours ago. However, this is when big players want to delete on the traders that they are greedy and they do not discipline to set the stop loss order. Okay, so this is the story that the market want to watch out. The players that they do not discipline to set a stop loss. Okay, and if you feel today market is very risky, and for me, I can realize that it's too risky because it's acting like we are in non-farm payrolls, trading news. And there's a lot of bullish and bearish trap, liquidity sweep, even in Asian and New York session. That is terribly risky for every traders. And that's why today I temporarily stop to provide the scalping signal. Okay. And when the market is more stable, yeah, it's sustainable, more sustainable, we will coming back and yeah, fight with the market again. Okay, so today lesson, I just share with you some experience, yeah, my experience about how to set up, yeah, use the model and set up the liquidity sweep with bin bar and engulfing retest. All right, retest like today. Sorry that I forgot to about the retest. Okay, for example, like today, retest point. When the price heading to breakout from the trend line on a daily time frame. Yeah, the orange line is the trend line from a daily time frame. And when the gold price is officially breakout from this trend line with this engulfing candlestick pattern, yeah, bullish engulfing candlestick pattern. However, today trading session is coming back and retest, yeah, touching to the trend line, and then it continues to the current uptrend. Okay, so that action is calling the retest. Even though that the market is having high liquidity today, however, it still follow the market rules. Yeah, touch, reverse, touch to the trend line, and now heading up to a higher level. Okay. And this is the market also want to tell you, well, want to tell you about the signal of the bearish or the retracement, yeah, in the short term. If you're looking at the chart in the 1 hour time frame, it's gonna be better for you to do the analysis in a smaller time frame, like 5 minutes or 15 minutes or even 1 minute, because it's had a lot of noise. All right, and this gonna be reasonable and easier for you, especially the beginners. You want to practice your analysis, technical analysis, and the suitable time frame I want to advise you is 1 hour. Okay, 1 hour. That is enough time. It's long enough time for you to wait and practice your discipline and your patience as well. Okay, so another tip for you to practice. Yeah, practice the analysis and set up the signal. Okay. And of course, multiple time frame observation must be required every time you start to establish any signal or any analysis report for own asset. All right. Yeah, that's just the lesson today I want to share with you.